Yeah, I mean, I first got into Bitcoin having gone through exactly this in the European crisis, 2012, and realizing that there were no bearer assets and your money was not a bearer asset either. And that's when I discovered Bitcoin. And here it is in the United States playing out, and Europe as well, with Credit Suisse going under, with people starting to realize the true value of what this is all about.
Bitcoin and the S&P 500 index, SPX, recovered from their respective intra-week lows to finish last week on a positive note. The recovery was largely driven by the expectations of a debt ceiling deal being reached between the White House and congressional Republicans. While the short-term picture looks promising, traders should not let their guard down. Many times the price rises on rumors and falls on the news. It needs to be seen whether the bulls will build upon last week's strength or give back some of the gains after the deal makes its way through Congress. Hello and welcome to Money Talks. In today's video, Raoul, founder and CEO of Real Vision, explained the benefits of Bitcoin during the banking crisis and how regulation will drive the price of Bitcoin in the future.
Yeah, although the issue still remains, it's too volatile to use as money per se. But what it does do very well is protects against the outcomes, which are more central bank printing. You know, it does a very good job with that. It obviously didn't do a very good job with regular kind of supply demand led inflation, but it does an extremely good job every time the balance sheet expands. I've always thought of Bitcoin as a call option on a future financial system. It's like, the probability of it being in the money every time you see an instance like this goes up, which is, exactly to your point. As soon as you see more outcomes that devalues money overall, the more probability that Bitcoin has a much higher value in the future or a much larger role to play. And we're certainly seeing that. I think, another big thing that I think played really into the Bitcoin narrative, which is still probably a bit misunderstood, was shutting Russia out of the SWIFT payment system and saying that all of the treasuries they hold are basically worthless.
Yeah.
So we've seen record central bank buying of gold, and we know that several central banks or sovereign wealth funds have been acquiring Bitcoin because in this world, they need something like this, a true bearer asset. I also think, we've all been monitoring the debt ceiling, and it looks like it's going to come down to something like 2011, where it got to the wire. And a lot of people are suggesting maybe this time is worse, and there is going to be a technical default of sort. Janet Yellen's given us the kind of dead date by about the 1st of June. Others suggest maybe it's July because there's some delayed tax payments to California to come through. But I just can't help but think that is incredibly positive for Bitcoin if you see anything close to a potential default. Because it creates, as you said, a complete lack of trust of the system, because you can't price any financial instrument at that point.
The latest Bitcoin gains appeared amid cautious optimism about the U.S. averting a default after the weekend's tentative debt deal. President Joe Biden and House Speaker Kevin McCarthy confirmed that they reached an agreement to raise the U.S.'s borrowing limits. The affirmation came a week after Treasury Secretary Janet Yellen's warning that the failure to raise the limit could leave the government without cash by June 1st. Bitcoin typically trades inversely to DXY. This long-term negative correlation may have prompted its price higher as the greenback fell against a basket of top foreign currencies. However, a decisive debt deal is considered long-term bearish for Bitcoin on fears that it would remove about $1 trillion worth of liquidity from the market. From a technical perspective, Bitcoin looks ready for a short-term correction toward $25,000. Notably, the BTC price has consolidated inside a descending triangle range since March 23rd. On May 29th, it tested the range's upper trendline as resistance and dropped. This pullback can extend until the price hits the lower trendline near $26,500. But since the ascending triangle appears after a strong market uptrend, Bitcoin's overall bias looks skewed to the upside, per the rule of technical analysis. Therefore, should the price break above the upper trend line, it could grow by as much as the triangle's maximum height. That puts Bitcoin en route to a possible rally to $31,000 in June, up 10% from the current price level.
But I mean, again, this whole shenanigan, regardless of how it goes, just shows the problem of the existing system. There is no real way out. You know, the only real way out is run negative real rates or debasement of currency ongoing.
Yep.
Yeah, and the next shoe to drop is a longer term one, which is, yes, right now with the inverted yield curve and everything else, it's a nightmare, and we'll probably see more banks go under. I mean, you know, at time of chatting, I mean, yesterday was another ugly day in the banks and doesn't feel like it's going away yet until the Fed cut and steepen the yield curve. But we've still got this issue of commercial real estate stuck on these banks as well. And that's a long overhang that's not going away. I mean, so few people actually go to the office anymore. You know, I went to a big asset management firm in New York's office last week. It probably seats 400 people. There's probably 20 people in the office. And they're like, oh, yeah, well, people come in 2 days a week. I'm like, yeah, but you don't need a 400-person office. And, you know, I look at liquidity as probably the biggest driver of asset prices because of, I think, this debasement mechanism. And, you know, we build a liquidity indicator at Global Macro Investor, and the NASDAQ is 97.5% correlated since 2010, and Bitcoin is 87.5% correlated. And it's only lower because Bitcoin has the exponentiality every time you get a bull market. But, I mean, that's staggering.
Yeah. And you have more of a frame of reference than I do on that. Like, what were those numbers 20 years ago or 30 years ago? I mean, is it this is something that we've never seen before?
They didn't use the balance sheet. So then you had M2, but M2 is actually the predominant driver of earnings as opposed to price. So the whole world changed in 2008 as everybody reset interest rates at zero. I mean, the entire world did. And so you've got this very cyclical cycle that actually matches the Bitcoin cycle because Bitcoin was birthed at the same moment. Everything has got an identical cycle, which is basically the global government's debt refi cycle. And it's between their 2-year bonds and their 5-year bonds that creates this 3.5-year magical cycle. And so that is what changed everything. And then what we found is every time we get to the lower part of the cycle, the interest payments, and I mathematically worked this out, the interest payments for that period of 3.5 years ends up being the amount of QE. It's almost perfect. The only difference is when they have to intervene directly into the banking system because that goes direct onto the bank balance sheet. So they're just monetizing the interest payments of the government, and they're all doing it. So I backed out all the maths. The Japanese started it first, obviously. I think the whole accord came together in 2012 when Europe went under. But it's Europe, Japan, the US, the UK, Switzerland. It's all the same. They're all doing the same thing. So it's like, oh, wow. So they're just monetizing the interest payments. And that's the entire growth of the balance sheet.
So is it a good time to invest in Bitcoin? And what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.